Hey guys, Tony Denaro here, and I'm going to play a quick excerpt for you from a video I did back in October explaining why the technical analysis being done on YouTube explaining massive spikes in AMC in November and December was a bit overdone, why we got to where we are today, and where we're going to go next week and the remaining of January. For all of these reasons that I have gone over, my feeling as an economist is that technical analysis and trying to predict a random spike up on AMC is probably being a little bit overdone right now. All that being said, there could still be some unknown catalyst come out of the blue, like what happened in June, and AMC could skyrocket. However, without this unknown catalyst, I foresee that for the next 6 to 7 weeks, if the market continues to be weighed down, which I expect that it will be, AMC could continue to be weighed down as well. I just want to level set your expectations and urge you to be patient while the market risk scenarios are worked out, while the debt ceiling is worked out, and while all of these other issues are addressed. Sometimes stock investing requires patience. Now, since that time, as the debt ceiling got out of the way, the S&P did go up about 5%. Supply chain issues are still out there, but in recent weeks, the inflation rate and the specter of looming interest rate hikes has decimated the NASDAQ and the S&P 500. As I was alluding to back in October, it is very difficult for high-flying stocks, those in the NASDAQ, some of them in the S&P, and yes, high-flying stocks like AMC and GameStop to gain ground in this sort of environment. But we have more at play than just that. Since Thanksgiving, we have seen AMC fall from around $41 to its Friday close of $20.57, about a 50% loss on the stock. Now, I don't think this is by accident. I want to share with you a couple charts to give you my thoughts about why this is happening and when is this going to turn around. I want you to take a look at this chart of the daily short volume by exchange. This chart shows the percentage of daily trades that were short versus long trades. In particular, I want you to focus on the far right-hand side of this chart where it shows the daily short volume since Thanksgiving exceeding 50%, sometimes 60, 63, 65%. And as I lay the stock price over this chart, I want you to notice what happens to the price of the stock once the daily short volume exceeds 50%. That is when we start taking a dive. Notice back in June when we had our big run up, the short volume was also under 50%. And here in September again, when the price ran up, the short volume was under 50%. So what is the difference between short interest and short volume? Short interest, as we know, is about 19.5% on AMC right now. That is the number of open short positions against the stock, which is currently about 100 million shares against the float of 513 million. Again, short volume is the percentage of trades during a day that were short trades versus long trades. What does this mean? That means two things. Either there's not enough buying pressure, or they're monitoring the buying pressure and putting just enough shorts to suppress it and push the price down. Why would they do that other than trying to scare you out of your positions, a psyop to get you to sell, so that they can close out their positions at a cheaper price? One of the major reasons that I think that they are doing this is because of the January open interest on options. It is my strong contention that they are going to suppress the price through the remainder of next week to make sure that all of these options, these open interest that are expiring January 21st, remain to expire worthless. We've got 13,000 at the strike price of 25, 22,000 at a strike price of 30, 12,000 at a strike price of 35, but 63,000 at a strike price of 40. And if we go all the way down to the $145 strike price, we have 200,000 open interest. Now that is a lot of stock that they do not want to have to hedge for, and they won't have to hedge for it unless we are able to move the stock price up. Buying more options at this point is useless because they're just going to expire worthless. Buying the stock is what is going to drive the price up. Buying the stock is what is going to make it more difficult for them to actively short and keep that daily short volume so high. You've got to make them work for that by buying the stock. We need buying pressure on the stock We don't need more people buying options. All that being said, if something were to magically happen and there were some catalyst and the stock price goes up, yes, these options that are sitting out of the money right now would cause massive gamma squeeze if the stock price goes up. But barring some catalyst to drive the stock price up, adding additional options right now is not going to be helpful. There is more than enough open interest sitting out there for January 21st to make this play interesting if the stock price can move up. So to close on my opening statement about technical analysis, it has not been useful for months on AMC, and most people have routinely got it wrong because we're dealing with a stock that is highly manipulated and they're willing to go in and short more than we're buying on a daily basis. But the light at the end of the tunnel is that is simply not sustainable. At some point, the price is going to get so low that there will be massive buying pressure. I think we might already be close to that at this $20 price level. Now, I don't know what the market's going to do in the next week or 2 weeks. Inflation, interest rate hikes, war between Russia and Ukraine. There's lots of things that can affect the stock market and that will also affect AMC stock right along with the rest of the indexes. So is there potential for the stock to go down a little bit more? Yes, but I do not think we're going to get anywhere close to some of these price targets that I'm hearing, like $5 or $10. I do not see that happening. The stock is worth more than that just fundamentally. Not to mention the amount of AMC investors that have been sitting on the sidelines waiting for the bleeding to stop to go in and pick up additional shares at bargain basement prices that haven't been seen in months. I'm not going to try and predict the bottom because that would be a fool's errand. I can look at the technicals and the moving averages on this chart and it is not a beautiful picture. But when I look at the RSI being in way oversold territory and the MACD histogram being so flat, I feel like we're on the verge of a turnaround if the market can catch a break. The shorts know that the lower the price gets, the more they are at risk of a quick, massive run-up when fundamental value buyers come in, and that price will skyrocket many, many points very quickly in a matter of days. Having gone over that, I want to say that I don't think that we're going to see a run-up in the stock next week because of the open options interest. They're going to want to keep the price suppressed through the end of next week. So my final message is hang on to your conviction. There could be some more rough days ahead, but this type of over shorting is simply not sustainable. Yes, they could keep on shorting more than we are buying every day for days or weeks, but at some point, the stock price is going to be so low that there are going to be more buyers attracted to it than they can short in a day. And once that happens, they're going to have to cover to get out, and the price will go up fast and big. I am Tony Denaro. I hope to see you on one of my live streams soon. I'm here every day during market hours providing reasoned and seasoned investment advice, answering your questions about AMC, GameStop, and other stocks, covering some other plays from time to time as we find them for day trading. Don't forget to buy and hold that subscribe button, and I will see you on the next video.
So you